Hello, traders. It's 8:01 a.m. Chicago time on the 29th of April 2020, the last Wednesday of April 2020. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. So welcome to episode number 1744. This morning, risk on sentiment across the board. Gilead came out came out with an announcement at the same time as GDP that caused the market pop. It says that remdesivir, I don't know how to say that word, trial for COVID-19 has met primary endpoint. The stock was halted and has resumed just now, and it caused about a 20-point push on the S&P, bringing us from 28.95 even to where we are now, which is right up against the 61.8% that I talked about before as the key target this week. The 29.23 area. We're trading 25, currently 29.25. So crude leading the pack. Crude is up $3 or 25%. Crude took a nice bounce off of the low from Wednesday, the 22nd, and has followed basically the same template as that day, has taken a push higher and is up 25%. It's the leader. The Russell is up 3.21%, 41.8 points. The DAX is up 241 points, 2.23%. The Nasdaq's up 181 points, or 2.08%. The Dow's up 487, 2%, and the S&P is up 56 points, or 1.95%. Gold is off $5, hovering around 1717 currently. So overall, risk on sentiment, and here we are. We've arrived at the main station in this area. Not only is this the 61.8% fib of the entire swing down from the all-time high, but we are also in this MC point of control, this major MC point of control in this region. So I expect that the market is likely to chop around in here this morning. We are in a gap up again. We have gap rules this morning, but not by far. The high yesterday in the S&P was 29.12 and a quarter. Today, of course, has some big releases. We did get the business confidence from the Eurozone this morning. Expected negative 1.24, and it came in at negative 1.81 worse. And then GDP was expected at negative 4.6, came in at negative 4.8, came out a little bit delayed as well. We have pending home sales in front of us. We have crude oil stocks, the usual, and then we have the FOMC at 2 p.m. Eastern with a press conference at 2:30. That's going to be a key conference to attend. I don't know. I mean, I don't know. We had Jeff Snyder on yesterday after market close, and I asked him this question at the end. What does he think the FOMC is going to say or do today? And his comment, I think, is it just makes sense. What haven't they done? And they're just going to talk up what they've already done. So the market's expectations for FOMC are kind of already out there and probably priced in, but we'll see what happens at 2 o'clock. Still want to respect that release. And then this evening, MBS manufacturing PMI out of China at 9 p.m. Eastern, expecting 47.6, prior 52. So that's where we stand in terms of releases, scheduled releases. In our review segment, the S&P yesterday was opening around 29.13, 29.12, and the primary expectation is a drift upwards towards 29.23, 24, potentially to 30, and then a drop, and then mainly a consolidation. The reasons for that were we are in this high volume node area, and we also have FOMC coming in today, so I expected it to be a rest day. The secondary is a dip and then a push for the same high around 29.31 or so. But it was scenario 3 that played out, a push higher through the overnight high, and then it never really made it into the overnight high as the market opened a little bit lower, but a drop towards the prior day's range. Yesterday, though, was a lot more aggressive on the sell side. Here's what actually happened. We opened in what was an open auction out of range. What is this pen? Here we go. We opened in what was an open auction out of range. Right up here, you could see it bouncing up, down, sideways, and then we broke lower, pulled back just ahead of the mid there. That's the blue line. This is the mid. Just ahead of the mid for a continuation into the prior day's range at 28.81 and a quarter. Once it took out the prior day's high, the expectation is a push into the prior day's close, and that is the point of control area. That's the big magnet. It did achieve that, consolidated for a little bit, and then had one more impulse down, pulled back a little bit for a continuation, and consolidated for a while. It ultimately ended up testing the prior day's high yet again at 28.81 and a quarter before selling off into the close. The market yesterday showed signs of active price discovery. There was really no consensus on price. There was a lot of trading across the board. What yesterday did, really, in my mind, is it gapped higher, and it just could not sustain these higher prices. Again, we have the MC point of control, and we have this 61.8% fib, as I've been talking about. I know a lot of people pay attention to it. I don't trade with fibs, but a lot of people do, especially bigger picture. So overall, the market rejected higher prices, and what it ended up doing is it ended up putting in a point of control and a value area on top of last Monday's the prior day, and so what does that tells us is the market is rejecting. What we're seeing here is the market is rejecting these higher prices by coming back into the range and holding steady. And the expected response, to be honest with you, the expected response is it's likely to consolidate for a little bit, attempt to push higher again, and then pull back. But that puts us ahead of this fib. It puts us just below the MC point of control. And then today it is back up here. As you can see, we're trading at 18 with a high of 26.75 in the S&P. So let me fix my delta here. So overall price. Remember the session before I was talking about sellers throughout. Seems like we had sellers throughout the session. As price went up, there was selling. Those sellers basically continued to be active yesterday, bringing price back to where it was in the prior session. This just honestly, this move higher is wasn't expected for today. But then again, we do have FOMC, and we are likely to see some anomalies, some weird behavior. So that's that. Here's the overnight session. The overnight session was simply to reopen at the same price and push higher. The overnight session remained above the mid right here throughout the session. It looked kind of bullish. It looked like it was headed for the prior day's high, 29.12 and 29.13 and a half. and holding steady. Pretty muted session until the Gilead news, where we just kind of stormed up and took the pressure off the longs here. And so that's where that stands. The delta overnight is positive, not huge positive, but positive, and overall the market is looking bullish into the open today. So that's where that stands. Looking at the order flow, you can see there's liquidity that's been resting there for some time. That liquidity was taken on the continuation on the Gilead news. So as we move from right here, which was the SOC, or the scene of the crime, or the point from which the news started, you can see there's a big spike, pullback, consolidate, and now we have our continuation, and this has ground through the liquidity that was at 29.20, 29.25, and has stalled out. We still have a fair amount of liquidity around the 30 area. You can see it sitting here, and this has been sitting here for some time. Paying attention to that area. I have this was the area expected to be tested yesterday. If you recall, here's the expectation yesterday on scenario one. Scenario 1 and 2, this 2931 area right here was expected to be tested yesterday, and what we're doing is we're pushing into that area today. So overall, there's a very strong reversal that has taken place. We have to pay attention to it. The auction to the downside didn't look quite complete to me, but who cares what I think? It's what the market says. So that's where we stand. The next level up is 29.50 in terms of liquidity, and then below there isn't much. So that's what the order flow shows currently. I'm going to, even though the way the stance of the market right now, being above the point of control, the overnight VWAP mid, and having pushed higher, my stance is I'm likely to see an opportunity to sell short into that 29.28 to 29.30 area on a first test. So we'll see how that goes once we open. But the order flow is not showing all that much in terms of bids or areas to target below. So that's where that stands. So real quick, let's switch over and take a look at what expectations are for today. So what are we expecting for this session? Again, we're looking at a gap. We're looking at a gap that is not too big. Yesterday's gap had a low probability fill and ended up filling. This morning we have a gap that is only 5 points from the high, from yesterday's high. So an external gap of about 5 points, but an internal gap of something like 50 points. So the expectation here is an open auction. I'm expecting it to move lower, move into for the inventory to balance, and I'm expecting it to move lower into the upper end of the range, looking for it to push into 2900, test the overnight point of control base, and then we have FOMC at 2 o'clock, and then the target upwards is going to be, and if it pushes higher, which is what's expected, I'm looking for 2931 to consolidate, and then to push into this upper area here, this low volume node at 2940 as the extended target. That's scenario 1. Scenario 2, same idea, consolidate in this crucial area, move back down, come into the prior day's range, consolidate into the FOMC, and then start to push down and move into the area that was tested yesterday, 2883, and then back down into 2871, and so forth, to give us balance yet again. And so what we end up with is 3 days of balance essentially as the market consolidates in a key area and what I see as a key long-term area. Um, so that's where that stands. Those are the two key scenarios. The third scenario is actually bullish today in that it is likely to test down, find buyers at the prior range, push up, consolidate here at the 31 and make its way into 40 and then potentially 50. That would be scenario three. But I'm going to tell you that the move up is on news. The move up is on news, and there's a tendency for the market to overprice news and then resume its auction. And the auction yesterday has started. The auction this morning was interrupted at 28.95 even. So that's why I'm kind of looking at the short side more aggressively. So that's where that stands. If you have any questions for me, if you have comments about the Trader Bite, you're always welcome to put them into the live chat box on YouTube or the comment box on Periscope, but also to just find me on Twitter. You can find me at twitter.com/futurestrader71 if you have anything to say. Good luck today, and I'll catch you tomorrow morning. Pay attention to the FOMC. Take care.